In this video, we're going to be looking at 5 companies that just recently announced a dividend increase, with one company even increasing their dividend payout by around 25%. I'll also be using a brand new spreadsheet to break down the dividend metrics for these companies, which you can download on tickerdata.com. So that being said, let's go ahead and dive into it. The first company that just announced a massive dividend increase is Domino's Pizza, and they announced a quarterly dividend increase of 24.8%. That is an absolutely massive dividend hike, and it puts their quarterly dividend payout at $1.51, but that wasn't the only news. They also announced a $1 billion stock buyback program. Now, over the past year, this company is up around 48.22%, and they're currently trading at around $447.23. Now, complete transparency, like always, Domino's Pizza is a stock I hold in my personal dividend portfolio, and if we look down here, we can actually see it's a position I'm currently up a little over 35% on. Now, let's start breaking down the dividend metrics for this company, and again, we're looking at my new dividend breakdown spreadsheet, where if we come over here, all we need to do is plug in the stock ticker for the company and hit enter. And you can see all this data is going to automatically load in, and we can essentially see every single dividend metric that I want to see on a single page, which is something I haven't been able to do in the past. So let's go ahead and start breaking this down. Now, immediately we can see the company does have a low starting dividend yield, currently sitting at about 1.35%. So that's a pretty low starting dividend yield, but their trailing 12 months payout ratio sitting at 32.7%, and their free cash flow payout ratio sitting at around 34.97%. Those are both very healthy payout ratios. Now, before we do anything else, let's go ahead and look at our yearly dividend payout chart. We'll go ahead and zoom in and start breaking this down. Immediately, we can see the company has done a phenomenal job of growing their dividend payouts over the past decade, going all the way from 80 cents per share to in 2023 paying out $4.84. And actually, if we scroll up, we can see after this recent dividend hike, they now pay out $6.04 per share in dividends. So that would put their 2024 dividend payout literally off the chart, somewhere all the way up here. So again, that is a absolutely beautiful dividend growth chart. Now, for a company to sustainably grow dividends at a high rate, what do they have to do? Well, they have to grow their free cash flow. Again, we can see amazing dividend growth, 10-year dividend growth CAGR of 19.7% and a 5-year dividend CAGR of 18.36%. So if they're going to be able to sustain these high levels of dividend growth moving forward, we have to see high levels of free cash flow growth. And that's exactly what this chart does for us here. I'll go ahead and blow this up. The blue lines we're looking at is their free cash flow, while the red lines is the amount of dividends the company paid out. So again, with the red, we can see sustainable dividend growth, but the blue lines showing free cash flow growth. They have seen massive free cash flow growth over the past decade. And that is exactly why this company has been a compounding machine over the past decade, and why their dividend growth rates have been so unbelievably high over the past decade as well. In fact, let's take a moment and put this company into perspective. When we think about companies that have seen phenomenal returns over the past 15 years, we think about companies like Microsoft, Amazon, and Apple. For example, the S&P 500 is up 477% over the past 15 years, Microsoft up 2,000%, Amazon 6,300%, and Apple 5,453%. But during that same time period, Domino's Pizza was up 7,783%. This is a great reminder that quality compounding companies don't have to be the next best thing, and they don't have to be a fancy tech company. Sometimes it can be as simple as a phenomenal pizza company. Now, like I mentioned, for them to see sustainable dividend growth, and like we just saw in this chart, they need phenomenal free cash flow growth as well. And the 10-year free cash flow CAGR and the 5-year free cash flow CAGR, both very nice, sitting at about 12.2% and almost 13% as well. Now, if we zoom in over here and look at the free cash flow payout ratio over time, essentially, we don't want to see a massive spike in the free cash flow payout ratio, despite the company increasing their yearly dividend payouts over this time. And we can see for the most part, this company's free cash flow payout ratio has stayed in the range of 20 to 40%, which is considered a pretty healthy range. So the fact they can increase dividends at such a rapid rate without their free cash flow payout ratio going over 40%, that is a very good sign for the company. So Domino's Pizza clearly has some absolutely phenomenal dividend metrics that makes them a phenomenal dividend growth company, which shows in the historical returns and their dividend growth over time. Now let's go ahead and run them through a dividend discount model. I'll go ahead and zoom in. And we can see with ticker data, this dividend discount model is automatically built out for us. All we need to do is plug in our growth rate projection, and I went with 7% and a discount rate of 8.5%. That gives us a dividend discount model price per share of around $431, which is only around 3.66% off of the current price. The next company that recently announced a dividend hike is the Coca-Cola company, one of the most popular dividend stocks of all time, and they just announced a dividend hike of 5.4%, raising their quarterly dividend payout to 48.5 cents per share. We can see this company is currently trading at around $59.53 per share, and over the past year, they're up around 1.14%. If we go ahead and jump over to my dividend breakdown spreadsheet, we'll go ahead and plug in the stock ticker and hit enter. And again, you can see all this data is going to automatically load in thanks to the help from the ticker data add-on. And we can see right here, the company's starting dividend yield pretty decent, sitting at around 3.26%. Now, if you know anything about Coca-Cola, it's that the company has a very rich history of increasing their dividend payouts for many, many years. And if we look at the yearly dividend payout, we can see pretty decent dividend growth over the past decade, going from $1.12 to $1.84 in 2023, and with the recent dividend hike, they're now sitting at $1.94 per share. But if we jump back over to Seeking Alpha and click on the dividend history tab, we can see this company now has 61 consecutive years of increasing their dividends. That's one of the reasons dividend investors absolutely love this company, is the very predictable dividend hikes that you receive. Now again, transparency, I do like Coca-Cola, but it's not my favorite dividend growth stock. I do have a position in this company and have seen nice gains. I'm up around 28 to 29%, but I haven't added shares of this company to my portfolio in probably 3 or 4 years, and let me show you why. First off, we can see the payout ratio trailing 12 months sitting at about 74.22% and free cash flow payout ratio sitting at about 81.58%. Now, to be fair, it is more typical for more mature companies to have higher payout ratios because they want to reward shareholders more in the form of dividends rather than reinvesting back into the business. And we can see decent dividend growth, 10-year dividend CAGR of around 4.75% and 5-year dividend CAGR of around 3.93%. But this chart here, free cash flow versus dividends paid, is what's pretty eye-opening to me. Like we already saw with our free cash flow payout ratio, dividend payouts make up the vast majority of how this free cash flow is used, and we can actually see it looks like in 2017 and 2018, they paid out more in dividends than they generated in free cash flow. Definitely not something I like to see. Now, I definitely don't think this company is at risk of a dividend cut anytime soon. As we can see over the past 4 or 5 years, free cash flow has definitely covered those dividend payouts, but it is definitely worth noting, with dividend payouts eating up the majority of free cash flow, you definitely won't see high levels of organic growth from the company. You definitely won't see high levels of dividend growth either, especially considering the 10-year free cash flow CAGR is sitting at about 2% and the 5-year at 3.66%. Now, when we look at the free cash flow payout ratio over time, it looks like it has been coming down a little bit over the past 5 years when the free cash flow payout ratio was a little bit over 100%, like I mentioned just a moment ago. So yes, this company is considered one of the most popular dividend stocks due to its phenomenal history and nice starting dividend yield, but keep in mind, you will not see very high dividend growth rates from this company or organic dividend growth. Now, if we jump over to the dividend discount model, again, I'll go ahead and zoom in, and with the help of the ticker data functions, we can see all this data is automatically pulled in. We're just going to apply our growth rate projection of 3.5% and a discount rate of 8%, and we come to a dividend discount model price per share of $44.62, which actually is a decent bit below the current trading price. But again, I would argue that Coca-Cola is definitely a company that trades at a premium due to its rich history and the predictability of its cash flows. The third company that just recently announced a dividend increase is another very popular dividend stock, and that is Pepsi. And they just announced a 7% dividend increase, making their yearly dividend payouts $5.42 a share. We can see they're currently trading at around $164.59, and over the past year, down around 3.93%. Now, like Coca-Cola stock, this company has a rich history of increasing dividends with around 51 consecutive years of dividend increases. Now, let's go ahead and again jump over to my dividend breakdown chart. We'll come up here and plug in Pepsi and hit enter. And you can see all of this data will go ahead and load in. Now, this company currently has a starting dividend yield of around 3.7%, but we can see their dividend payout is showing around $5.06 per share, but we can see this hasn't been updated yet because the new dividend hike will put it at $5.42. Now, if we look at the yearly dividend payouts again, pretty nice upward trend over time. We can see they've gone from $2.24 per share all the way up to $4.95 per share in 2023, and now they're sitting at $5.42. Now, like Coca-Cola, this company has a fairly high payout ratio, sitting at about 73.64%, and the free cash flow payout ratio sitting at about 84.33%. So immediately we know most of their free cash flow is being used to pay out dividends. Not necessarily something I like, but it is pretty common for more mature companies. We can see a decent 10-year dividend CAGR of around 7.17% and a 5-year dividend CAGR of 5.94%. Now, here's something I want to point out. 10-year dividend CAGR at 7.17% and 10-year free cash flow CAGR at 1.4%. With them increasing dividends at a rate much higher than their free cash flow growth, one of the things you'll notice is the free cash flow payout ratio over time is steadily increasing. This is very evident when looking at it charted out. And again, if we come down and look at our free cash flow versus dividends paid chart, at first they were generating way more free cash flow than dividends paid, but over the past decade, we can see this gap has started to close. This will undoubtedly hinder the company's ability to increase dividends at a rapid rate over the next few years, and I think it's unlikely we'll see them increase dividends at a rate of 7% like we saw for the past decade. So if we go ahead and jump over to our dividend discount model, I'll zoom in, and again, this data is automatically imported with the ticker data function, but after assuming the same growth rate projection as Coca-Cola of 3.5%, discount rate of 8%, we come to a dividend discount model price per share of around $116 per share, quite a bit lower than that current trading price, but again, I would argue due to the company's stability and predictability of their cash flows and dividend payouts, they do tend to trade at a premium. The fourth stock we're going to be looking at is one with a very nice dividend hike, and that is Hershey. We can see they raised their quarterly dividend by 15%, pushing it to around $1.37 per share. And if we jump back over to the homepage on Seeking Alpha, we can see they're currently trading at $188 per share, but over the past year, they're actually down around 20.54%, and over the past 5 years, up around 67.56%. So let's go ahead and jump over to our dividend breakdown tab. I'll go ahead and plug in HSY here and hit enter. And again, we can see the data automatically load in. And I absolutely love these charts because we immediately know this company has a very nice dividend history. We can see a decent free cash flow payout ratio, growing dividends, and we can also see that the free cash flow easily covers the dividend payouts. But let's go ahead and dive into it deeper. Starting dividend yield, pretty nice, currently sitting at around 2.91%. And the payout ratio is currently sitting at about 47.75%, and the free cash flow payout ratio sitting at about 57.28%. Now, if we look at the yearly dividend payout history, it looks pretty good with some pretty nice dividend increases over the past 2 years, going from around $1.81 now all the way up to $5.48. We can see double-digit dividend growth with the 10 and 5 years at 10.39% and 12.88%, and the free cash flow growth has been pretty solid as well, with the 10-year sitting at 6.36% and the 5-year sitting at 9.59%. Now, there was a moment we can see in 2014 where that free cash flow payout ratio got very close to around 100%. Obviously not something we want to see, but since that time period, we can see the free cash flow growth has grown at a very healthy rate, definitely enough to sustain high dividend payments. So let's go ahead and jump over to our dividend discount model tab. Again, all the data is loaded in with ticker data function. We can see projecting a growth rate of 6% and a discount rate of 8.5%. We come to a dividend discount model price per share of around $232.35, meaning it looks like the company is currently a little undervalued. And the fifth company we're going to be looking at, again, had a massive dividend increase, and that is Sherwin-Williams. They had an 18.2% dividend increase, bumping it up to around 71.5 cents per share. Here on Seeking Alpha, we can see they're trading at $335.23. Over the past 5 years, up around 130%, and over the past year, up 53.07%. So this company has performed very well over the past 1 and 5 years. Let's go ahead and jump over to the dividend breakdown tab, plug in the stock ticker and hit enter. And immediately we can actually see some pretty interesting metrics. First off, let's just touch on the starting yield, sitting at 0.85%, and we can see very nice low payout ratios. Now, when we look at this yearly dividend payout chart, it's a little startling at first because we can see pretty nice dividend increases, but it looks like they had a dividend cut. So what exactly is going on here? Well, there's actually a pretty clear explanation. First off, we need to keep in mind this is showing us the yearly dividend payouts on a per share basis. Now, why is that relevant? Well, to show you, let's look at the free cash flow versus the dividends paid out. This is the total amount of free cash flow paid out from the company each year versus the total amount paid out in dividends each year for the company. And unlike the yearly dividends per share payout ratio, we can see the red bar chart is increasing by a decent amount every single year with no cuts. So no, this company did not cut their dividend. What actually happened is they had a stock split, and this is why you have to be careful. For example, if we look right here at the amount paid out in dividends for the company, which can be seen on the statement of cash flows, we can see in 2013, they paid out a little over $204 million, and in 2023, they paid out a little over $623 million. So yes, they definitely did not cut their dividend. They actually increased their dividend payouts every single year. And this is one of the reasons I love the free cash flow versus dividends paid out chart, because when we look at it on a per share basis, it could lie to us, but when we look straight up at the free cash flow versus the total amount of dividends paid out, that's straight from the statement of cash flows. This is not going to lie to us. There is clearly no dividend cut during this time period. So while the 10-year dividend CAGR and 5-year dividend CAGR on a per share basis, these metrics are clearly not right. It's very evident that they rapidly increased the amount they paid out in dividends during this time period. And that's also evident because they saw massive free cash flow per share growth during this time, with a 10-year sitting at about 11.13% and the 5-year sitting at 14.07%. And this is actually a very safe dividend. Look at this free cash flow payout ratio over time. It's pretty much sat in between 20 and 30%, with the exception of 2022 when it jumped up to around 48.5%. So again, this company has been a compounding machine over the past decade. They've seen massive free cash flow growth, and they've also seen massive dividend payout growth during that time period. So again, this is why it's important to not jump to conclusions immediately when you see a chart like this. You need to jump into the details just a little bit more at times to make sure you fully understand what's going on with the company. So finally, if we jump over to our dividend discount model, let's go ahead and zoom in again, and we can see, assuming a growth rate of 7% and discount rate of 8%, we come to a dividend discount model price per share of around $306 per share, which is pretty close to that company's current trading price. But there you go, those are 5 companies that just recently announced dividend increases. If you'd like to get access to any of my spreadsheets that you've seen in my videos and access to the ticker data functions that allow you to automatically pull in stock data, then you can head over to tickerdata.com and start a 7-day free trial. But with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.